Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and today a quick video about how bond yields have been spiking in the last day or so. Here we see rates reverse higher rapidly on growing costs to combat crisis. Treasury yield hits 1.2%. That was from Wednesday. As we see here, updated today, U.S. 10-year at 1.157. Although thought this was significant news, U.S. debt yields leapt. I wonder if you leaped or leapt as investors sold 10 and 30-year bonds amidst talk of a potential $1 trillion stimulus package. Well, on one hand, it's not at all surprising to see people scared in the bond market. The Fed is printing everything in sight. The Treasury, a couple days ago, we're looking at an $850 billion stimulus package, has grown to $1 trillion. Apparently, we're all going to get checks here in America. So that'd be great if I could get a check for $1,000 and use that to buy silver miner out of the money call options. What a planet we live in. But I mean, again, let me preface this saying it's still a little bit early to tell, yet, gee, you'd have to think at some point people in the bond market realize, so the plan is to print money, directly monetize treasury debt, and then just keep spending more. So something many in the Austrian or precious metals community have been wondering for years is, will we see these bond market vigilantes one day say, wait a second, 1% on a 10-year when the inflation rate was already close to 8 or 9%, and now the Fed has done this and there's no end in sight. It's amazing that we're still looking at the Treasury as the safe haven. Especially given how there have been disruptions in the Treasury bid-ask spread in the past week. So I will stand by my belief that something broke, I think, on Friday, kind of made like there was a Lehman-like, something of that magnitude happened, which, of course, they don't tell us about. But just seeing the way the Fed, by the day, is tossing more money at it, seeing it not work, and then doubling down the next day. So does that mean bond investors are getting closer to throwing in the towel? Again, I'll be clear and say it's a little bit early to tell, yet you would think that would happen at some point, and that also it could happen quickly. These things have been delayed and suppressed for so long that it's almost inevitable that when they happen, that they are of a quicker nature. So, but I guess what better way to stay posted than hit that subscribe button, hit the notification bell. I'll behave myself. I won't go all Jim Cramer on you here. But if you are thinking about, yeah, it does seem a little odd on calling a treasury a safe haven, and wondering what would be the equivalent if we saw the gold price rallying like that, well, I got another video coming your way which gets into exactly that. So just hit the box that's about to appear, and I will see you again soon.